Here. Oh my gosh, I don't know what's going on over here. All right, good evening, everybody. Good evening. Excuse me, and welcome to another edition of DayTradeSPY.com's Week-In Review. All right, let's get started. It's just 8:01. I see a lot of people are still joining us here. Come on in, gang. Lots room in the front here. And a couple things I just want to mention to you. Sometimes I do talk a little bit too fast when I make these presentations. And I just want to tell you, if you feel that I'm talking too fast or you're not understanding something, just let me know in the questions box and I'll slow down because, yeah, you're very passionate about what we talk about. So that's kind of what happens, you know what I'm saying? Anyway, the other thing I have to tell you about is if you have any questions, right? That's what the questions box is there for. Put your questions in the questions box. We'll certainly endeavor to answer them all here for you tonight. I don't want to keep you on much longer than an hour. I know I say that every week and then I go about an hour, 10, hour and 15, but there's so much to seem to be talking about here tonight. But anyway, the market's crazy. A lot of people have been staying away, but this is the worst time to stay away. This is the time to get in, right? With the volatility and whatnot. This is the time to make money. Although I'll admit that we've had challenges ourselves, so it's not been easy street, that's for sure. So anyway, all right, so let's get started here. Okay, I think I gotta push this one button. Here we go. All right, good evening again, everybody, and welcome to DayTradeSPY.com's Week in Review. And my name is Hugh, founder of DayTradeSPY way back in 2010. We're now in our 16th year of doing this, 16th year. I believe early May, we flipped up the clock to it started our 17th year. That'll have been 16 years. So yeah, it's a long time. Long time to be doing this. I believe we have the world's longest running trading room that we know of anyway. So continuous trading room. Anyway, you're there, we're here, and let me just flip this over. Okay. Oh, what do we got to talk about? Okay, so there's me in real. All right. Hiya, hiya. Okay. Yeah, last several weeks we were down vacationing in Florida, so we didn't have a camera on that one, and it was kind of strange, but so it's probably better that way, isn't it? It's just I don't know. Anyway, won't I won't bore you with that. But anyway, let's get moving here, folks. Questions box there for your questions and comments. Okay. And here's the standard disclaimer. By attending this webinar, you fully understand and accept the financial risk. I'm going to leave you with a little time here to read this. All right, I'm gonna let you read this. So, okay, give you a few seconds. Not a problem. All right, folks. Excuse me. You understand you alone are responsible for all your own trading, and past performance does not guarantee future results. And all that said, good trading. Here's what we're going to talk about here tonight. We are going to discuss last week in review. I'll look at the upcoming week, give you a little 2-minute tutorial, and answer your questions. Got a little contest here. The winner is going to take away an ebook. Uh, I believe the when it's going to be uh, tips, tricks, and traps. Tips, tricks, and traps. That's what we're going to give away, right? It's not a skill testing question at all. It's just a lottery, right? You're gonna pick a number from 1 to 100 and let me know what it is. Then we just spin the wheel, right? We spin our day trade spy random number generator. All right, so let's get started. My name is Hugh, and for those of you who don't know, I've been doing this a long time. Early years spent deep in the trenches. That's where I learned most of what I teach. And I discovered this. I never wanted to set out to do this, but I was coerced after. So what happened was my financial advisor blew out half my account. So I decided to take control of it and learn how to do this myself. And I started getting some winning strategies and bringing home the toys. And then people started to coerce me. Well, what are you doing? Show me, show me. You got to teach me, teach me. There seemed to be a lot of interest in this, and that's what we did. So um, I like to trade. We've been doing this internationally here, teaching people since 2010, and I like to do short-term breakout trades. So if I can just make a few bucks every day, right, a little bit of money every day on my options, and ramp that up to, you know, I mean, it varies. Sometimes I make a few thousand. Sometimes I just make a few hundred. Sometimes I just make, $100. So it's whatever I decide that day I would like to make. And the nice thing about trading options is that you can kind of call your own shots. As an example, let's say my wife says, "Well, let's go to Florida, spend a couple weeks down there or a month or whatever. It's not a big deal. Let's make some money and do it." So I'll focus in on my trading and make the money to get down there and just have fun, right? That's all we do. So anyway, I love to teach other people how to trade. That's really what I like to do. I don't have to teach, and just like my associate John, neither of us have to do this, but we do it because we enjoy it, we love it, and love to see the successes of other people. Now, John, he comes from a different angle. All right, I came from corporate angle. Used to work for corporate America for an insurance company, a major insurance company, and internal audit. Excuse me. So I was familiar with numbers, knew a little bit about risk. I figured, well, I can lose the money just as much as the next guy, right? So that's why I seized control from my from my financial advisor. From my financial advisor, I don't know what he's doing now. Maybe selling shoes or something. Now, nothing against shoe salespeople, but anyway, folks. So what happened was, I think it was 2022. Eagle Financial Publications took notice made an offer I couldn't refuse, bought us out, and then they hired me back. Just when I thought I left corporate America, back to corporate America. Yes, they are listed under the Nasdaq, I think under SALM or something, Salem Media. But anyway, we just chugged along there. And then they brought John Johnson, who was actually a super nice guy, lawyer, right? And he retired from Eagle. He had a newsletter and a service there, but he retired from there. But they brought him back. Say, hey, you want to do a trading room with you? Yeah, sure, why not? And anyway, John is actually a litigation lawyer turned options trader, trainer. Now, that's a real pivot. That's a real pivot. That tells you a lot about him, a lot about John, a lot about everything. And he lives in Texas, got a beautiful ranch down there, and highly acclaimed in industry publications. Uses highly effective tools to determine his trades. His philosophy is very simple. Take what the market gives you. And like me, he loves to teach others how to trade. Now, excuse me, we have a deal. Oh, man, let me just get a drink of something here so that I can clear my throat. Mm. We actually we were down in Florida for several weeks and just came back a couple days ago, and kind of getting used to everything here, getting settled and getting caught up in all the paperwork that and there's tons of it, and all the paperwork that's been piling up on my desk. I'm still opening up envelopes here as I speak. Anyway, there's another one. So, and I was gonna go ask you questions here. I'm just to see the questions coming in. So John and I, we do the trading room together, and I'll tell you more about that later, folks, especially for the new people. All right. So we do the trading room together, but John also does the Wednesday night session, and I do the Sunday night. So we just flip back and forth. But I like to acknowledge him and tell you he's really worthy of your attention in the trading room. The guy knows what he's talking about, which is really really nice. Okay. Anyway, John and I love to do this. We do this. We do this every morning. We have actually a pretty good system going. You see, what happens is when I have my own set of indicators that I use, and when they line up, I like to get into a trade, right? And John has his own set of indicators that he likes to use, and when his line up, he likes to trade. But when we announce that, well, I see a move to the downside now, and I say, yeah, I see the same move to the downside, and here's why. And so we have a saying here that when our indicators unite, our trades ignite. More than just a saying, it's actually very true, and it works extremely well. So if we say we see the market's going down, you might want to buy some put options. Okay. By the way, if you are new to trading, new or new to options, new to SPY, new to us, let me know in the questions box. All right. And maybe if you need some more attention on options, we can certainly do that at the end. All right. All right. So John is not here with us tonight, but I certainly am. All right. So here we go. All right, Spy on the Market. This is our newsletter. It goes out every week. This is something that we write. Well, actually, I write it. Uh, it's a free newsletter, e-newsletter. Gets in your inbox every Thursday. Very brief. It only takes a couple minutes to read it. Very light, relevant, even entertaining. All you have to do to subscribe, just go to our website, daytradespy.com. Isn't that funny? That's what we do. We day trade spy, and that's the name of our website, daytradespy.com. And this week's topic is when you should not trade. When you should not trade. We talk a lot about when you should trade, but we should also talk about when you should not trade. There are times when you should say, you know what, I'm going to sit on my hands on this one, at least until whatever it is passes, right? Just like if you think about it, I mean, let's say you're in a sailboat and you have your sailboat and you know how to sail. But you should probably take a look at the weather and see, do I want to go out on this? There's a bad storm coming, and I don't want to be caught kind of in the middle of the water. Um, could get real nasty, right? And some people have been known to lose their lives on a sailboat because they ventured out when they shouldn't have. Anyway, so we try to trade when it's a nice day out, and not go into the bad weather. Also, as a private pilot, we like to stay in good weather. So much nicer in good weather than bad weather. Um, Bad weather is not good for airplanes either. Anyway, here's a look at last week, folks. Last week, I don't have to tell you what happened. That chart does not look too healthy, does it? Well, it was all about oil, all about oil, and it was, yeah, it was brutal. I am not going to kid you. Markets rebounded on Monday here. That's this here. Rebound came up on Monday here after the war in Iran was temporarily calmed. Crude oil dropped from 102 down towards $93 a barrel. Well, that was good. Good news there. Technicals brought it up to a double top. We have a double top here. Let's see if I can just draw in some lines. Draw some lines. This is the line. Draw a straight line. Shape. Oh, shape. So the reason I put it, I put Friday's chart up here as well, because we came down here. Excuse me. We came down. We found some support down around here, which is if I just stretch this over, what's that, about 662 or something? I wonder if I can draw a straight line across shapes. Okay, I'll give that a try. I'll give that a try. Let's see. Straight line across. Yeah, there's around 662 or something like that. Anyway, get that rid of that one here. Clear my drawings. Clear all drawings. Clear my drawings. Clear. Okay. Well, anyway, double top there. And that's why I put it up there because we had some resistance here. Came up to resistance, and we did come down a little bit, and the market was calmed because of, well, the Iranian war is going to be temporary. We're out of there soon. The Navy in Iran is sitting at the bottom of the ocean, but so the market went up a little bit. But then it came down. It followed. I better get that one in the garbage here. Okay, and then let's get rid of this. Tuesday, oil continued to dominate the market. So issue with the Strait of Hormuz. Okay. Iranians want to control that. They're saying anybody comes through here, any enemy, that gets blasted out of the water. Well, that did not sit well. And a few ships, I guess, I don't know how many ships were lost now because of that, but oil continued to dominate the market. In fact, all week, in the last couple of weeks, it's all about oil. But the anticipation of Fed's meeting on Wednesday also buoyed the S&P 500 to finish about 0.2%, 25% higher on Tuesday. The Fed meeting came in on Wednesday. Still, rising oil prices led to inflation fears. And let me get this corrected here. Led to inflation fears. I thought this was checked. Okay, get rid of that. Right there we go. I don't like typos here, right? Rising oil prices leading to inflation fears dampened investor sentiment. Sent SPY down 15 points right here. All right, SPY just collapsed right here and it came down. All right, very quick. Nice of it to take a little break around 666. The devil's numbers, huh? Right down around 661-ish. Um, but mostly because Fed Chair Powell's statements. He cited concerns that may prevent any further rate cuts the rest of this year, and if inflation continues, possibly even having to raise them if inflation is really bad. But we'll see what happens. I don't think he touched on that too much, but enough to give some jitters into the market. Now, so we came down to this level, around the 660 level, dropped down here in pre-market on Thursday as oil jumped briefly above back to $113 a barrel. Escalating military activity in the Middle East, Strait of Hormuz sent SPY still lower. And then, of course, we got into Friday. Oil is still top of the news here. SPY fell, closed its fourth consecutive losing week, driven by geopolitical turmoil. Surging oil and inflation fears led to SPY to a loss not seen since September the 5th. September the 5th. Let's see, we had October, November, December, January, February, March. Over 6 months. We just wiped out over 6 months of losses. Now, as soon as that war is over, this is going to shoot back up because fundamentally the markets are still sound. Okay. At least that's what they tell us. So, Um, let's get rid of this here. Clear all drawings. Okay. From a seasonal standpoint, let's take a look here. That blue line is the current SPY price, and the red line is the average of last 5 years closing price on SPY. All right. So I don't know why this is just kind of not there. Let's try this here. Okay, there. So let's just zoom in a little bit here to see what's going on here. So if I compare this to the last 5 years, historically, SPY rose about 4 points over last week. Excuse me, and historically, SPY rose about 2 points coming up into the following week. Is it going to happen again? Not necessarily. In fact, of course, in the last 5 years, we've not had a war in Iran of any consequence. So maybe those rules don't apply because now we're in a different situation. And we talk a lot about this war and should we even be there? Should we not? And whatever. I put it up in my one of my newsletters recently about my opinions that this war actually started in 1979. Remember that when the rioters came out and the regime stepped in and death to America, death to America. Anything, they're really disapproved of American policy. Not sure why they were involved in American policy, but back in those days, I think President Carter should probably have eliminated that real quick, but he didn't. We were very patient. We were very patient, folks. Started in 1979. It's now 2026, and it's now 47 years later. The problem is we gave Iran a lot of stuff, right? Money, weapons, technology, all kinds of stuff, and then they turn it against us. Hello, really? When the threat becomes real, when terrorists start attacking you, you got to move. Anyway, I don't want to talk about the war too much right now, but finally, Trump is putting an end to it, and we'll see. Hopefully this will wrap up soon. I have to think it has to. I don't know. It's not going to drag on. Anyway, the Middle East conflict triggered a solid oil shock, and the duration of this is going to determine what economic and market impact it's going to have. Again, unlike the 70s, right now the U.S. and if you remember in the 70s, right, the oil embargoes, OPEC, and all that, they were oil went up in price. I don't know. I don't say triple, quadruple, whatever it was. I forgot, but it was massive, and there were oil shortages. Remember they rationed oil? Am I dating myself? I was much younger in the 70s, but I remember that because I thought, oh, this is not good. Now, I'm going to tell you something. I was at the time too still living on the border in Buffalo. We were on the Canadian border. And what we used to do back in the 70s is there's lots of oil in Canada. So we would get in the car, well, my parents, not me at that time, but my parents, and I'd go with them, and we'd cross the border and go to the gas station. We'd fill up for gas and then come back. Because so the only lineups they had there were, of course, all the other Americans doing the same thing. But there were Americans lined up at gas stations for hours back in the 70s because we didn't have the oil like we had. We didn't mine it like we do now or drill it, whatever. Anyway, we're more insulated now in energy supply. I believe we are a net exporter of oil, so it's not hitting us quite as hard. But we're still in an oil intensive society, and any change in oil prices is going to affect us as well. Base case is sharp, but expected to be temporary again with rising inflation in near term. The Fed's left the rates unchanged earlier this month. I think this week. I don't think it's any surprise there. I think the estimates from the analysts came in around 97, 98% left unchanged. And there are a couple of descendants thinking that they're going to drop the rates by a quarter point. Didn't happen. It's left at 3.5 to 3.75% as expected. But there's still uncertainty around the Middle East regarding the oil prices there. The Fed revised its inflation estimate up to 2.7% for the year, but left the next 2 years largely unchanged. Powell also said that he will continue to lead if the Trump appointee Kevin Warsh has yet not been confirmed by the Senate. I believe Powell sits in that chair until May, and he said he's willing to continue on. So we'll see what happens there. Feds remain cautious for now, with policymakers willing to look past this one-time energy-driven inflation boost. They are still looking very much at the fundamentals on what's driving the markets. And again, once this war passes, like a bad storm, then we're going to return to higher prices, and volatility is going to remain elevated, but stronger fundamentals are providing a cushion here. So I expect markets to bounce back fairly quickly once the war is settled. I don't know if it ever will be, though, quite honestly, because they have this fundamental. It's not like we're fighting over land or something, or something. We're fighting over ideology, and this ideology is very. They really believe this, whatever it is that they're believing. They believe that if a woman, a 23-year-old, this true story, I read about this, must be true, but I don't know if it's true or not, but I read about it, how a 23-year-old, and this happens a lot. This regime kills its own people in a drop of a hat. This 23-year-old girl was wearing her scarf the wrong way, and they shot her. And I read that story a couple of times because I could not believe that. I could not believe it. In fact, I've not met too many 23-year-old women that I would like to shoot and kill. So something is seriously wrong with somebody who does that in the name of the Lord, right? Wow, really? Wow. Okay. Anyway, much depends on the headwinds in Iran, what happens here. If oil stays high, energy, large caps and tech may hold up the best. Okay. They're going to weather out this thing. But if the tensions ease or when they ease, the focus is going to go back on small caps value and international stocks. So that's kind of what we're looking at. At least that's what the analysts are all predicting here. So we'll see what happens. Hopefully it'll be done. It'll be one and done soon, right? One, WON, one and done soon. Here's a look at household spending, the share of consumption, personal consumption, spending on gasoline and energy products, going back to 1960 to 2026. Here's the late 70s, right? Early 80s when the oil embargoes. So households spent a greater portion of their income, obviously, on gasoline. Gasoline shot up, and if you got to go to work every day, you got to fill the car. That's not a luxury item. That's when they started carpooling. Remember that, all that stuff, and all that. But boy, we sure spent a lot of money there. Over 6% of our income went to energy consumption, and I remember too, even the natural gas. There's a point in there. Was that the 70? I think it was around the 73, somewhere in there. That whole area in there in the 70s. They asked us to turn the thermostats down to 68 at night. I thought, wow, 68. Yeah. So use lots of blankets. Or was it 70? I can't remember. So one was either at night 68 and up to 69 or 70 during the day. It was brutal. It's brutal. And of course now we've been trending down. We're still spending a fair bit on oil, but I don't have the latest figures. I'm sure it went up a little bit here, but here's a consumer's better position than the past with the oil spikes. Um, Here's a graph that shows U.S. oil prices have reached, in some cases, exceeded current levels several times over the last 15 years. This is how much money per barrel. When you get into 100 to, $115 a barrel, we touched that several times in the last 15 years or so, 10, 15 years, 20 years, right? And we're touching that area right there. But we're kind of in a better position to do that. So it's going to come back down again. As you can see the graph, it doesn't stay high forever. So unfortunately, the stock market took a hit once again. I believe it's like the fourth week in a row. S&P, once again, we lost 1.9%. Year to date, we're down 5%. 5%. But here's the thing, and I've been having people ask me, so, well, what should I do with my retirement savings? Should I cash out, go to cash? I've been saying, well, you know what? I mean, talk to your financial advisor, but if it was me, I would stay the course. First of all, this is going to be temporary, and once it's over, it's gonna pop up very quickly. I think you'll see it pop up very quickly. And you don't want to miss that pop, right? You don't want to close the barn door after the horses are out. You want to be in on the certain. Now, it might go down a little bit, but don't worry about it. It's not going down long and forever. So you kind of want to stay the course. And here's the other thing. Excuse me. If everybody bailed out of their retirement savings and got into cash, there's going to be a run on this, and that's what's going to cause the markets to go down, right? The big sell-off. If everybody sells, that's what causes markets to go down. So you just want to stay the course. Just hold on. This is going to pass. All things pass, right? All things pass. So Dow and Nasdaq, they also suffered. They suffered more. Excuse me. The Dow and the Nasdaq both suffered 2.1% this last week. But you can see the Nasdaq is down year to date almost 7%. That's because the big stocks are there, the heavyweights, right? And they're overvalued anyway, and they're gonna be the first to take the hits because of their valuations. So it's not surprising that they're down 6.9% year to date, but they'll also be the first to come back up. All right, so I got a question for you folks. If you don't mind, put this up in your in the questions box. Um, we actually had a meeting the other day, and we're just kind of going over if we were to have a say a webinar. It's going to be a paid webinar, probably go for an hour and a half, 2 hours, whatever it is. What would you be interested in seeing? If you were to pay for a webinar, what would you want to learn about? Because this is not the time to sit on the sidelines on trading. In fact, this is the time to get in if you know what you're doing. That's why Day Trade Spy is doing so well because we make money going up or down a little bit every day. Excuse me. So when you see a hit on the stock market, it doesn't really affect us. I mean, it does in some ways, but not in ways that you would think. It's not like suddenly all our, equities vanish because, the price of oil went up. So let me know what you would be interested in if we were to host. This is going to be a paid seminar, webinar. Probably not much, maybe a couple $100 or something. But would you like to talk about trading through the war? Because it is different. All right. Now, John and I, we're going to be hosting this, and we have seen it all. And just thinking how many years I've been doing this. Well, I have been trading publicly since, well, in the 16th year, but privately, I go way back, even long before that. I'd like to say I've been doing, trading for probably 25, 30 years. Um, not so much at the beginning, obviously, but I've been in the markets a long time. Same with John. We like to say combined we have, 45 plus years, but I think it's a lot more than that, actually. I think it's like 50, 55 years. I'll have to ask John about that and figure mine out as well and update that figure. But so we're looking at putting on a webinar here for you, just to get things up to speed with what's going on these days. So trading through the war, Fibonacci and pitchfork, some of the technicals that John talks about. How about support and resistance? Some of the things that I talk about, and also fundamentals, how they affect the markets, or E, other. So punch it up in the questions box here, what you would like to talk about. Okay, a lot of B's, some A's. How to read the charts. Okay, read the charts. D, E, C. Okay. Okay, pretty good spread all over the place here, isn't it? Interesting. Okay, what indicators to use when deciding to take or hold a position? B and C, B. Yeah, okay, interesting. Okay. Well, that's good to know. All right. Well, thank you very much for the information on that, folks. We will take that back. We will take that back. So, all right, let's get on with the week ahead. Monday, we're scheduled low, no news day, not a whole lot happening. Actually, it's been going to be a fairly quiet week, driven mostly by news, I think, the headline news. Tuesday, S&P Global Flash Manufacturing PMI and also S&P Global Services PMI report. We also have the Richmond Manufacturing Index up on Tuesday. Wednesday, another low, no news day. And unemployment claims on Thursday. And on Friday, University of Michigan, I think it's their final consumer sentiment and also their inflation expectations report coming up on Friday. These are the news items that are going to make the fundamentals. Well, some of them. Of course, it's going to be mostly news driven with what's going on overseas in Iran. Now, given that, at least temporarily here, and again, excluding whatever's going to be the headline headwinds news, expect low volatility on Monday and Wednesday, high on Tuesday and Thursday, and back to medium on Friday. All right, so that's kind of the way we see it right now. Again, when the news hits, right? When the news hits, we're going to be seeing what the news brings. If oil goes up, it's going to have an inflationary effect on the market, which has a negative effect on the market, on the stock market. Has an inflationary effect on the economy, which has a negative effect on the stock market. If oil goes down, obviously the converse is true. Okay, so that means that inflation is going to subside a little bit on the economy, and the stock market should go back up. It's funny how I'm just kind of looking at the stock market, how it's really interesting how it's so heartless. If you think about it, it's just a very, very heartless entity, right? It doesn't care about the thousands of lives that are being lost every day, in a war. It cares about the price of gas at the pump. That has more relevance. But it is the market, and the market speaks with its wallet. But anyway, we're going to see what happens. And again, watch for the news. I like to say also volatility rises, tends to rise when President Trump speaks. I don't have him scheduled right now, but his presentations come up very quickly and could be the same day. So you want to check the news and see when he's going to be speaking. Usually he speaks later in the afternoon anyway, so usually does not affect what we have. So all right, news of course drives the markets, and I like to say when the news breaks, we fix it. Okay, 2 minute tutorial. Um, Challenges in today's trading environment. Challenges in today's trading environment. Let's take a look and see. No question about it. There's a lot of uncertainty in the markets, and a lot of it I think has to do with accuracy in the news. And I think it's going to be one of the topics in this week's newsletter, right? So here's the thing: in times of war, calamities, you don't really get accurate news. You get the news that they want us to hear, and the legacy, and mix in the legacy news media outlets, and the news they release. I'm not going to call it fake news, but it just might not be that accurate. So here's the thing, we get this news, we try to act on it the best way we know how, but the news comes out, and then the media outlets also twist the news, and then the market reacts on what the pundits say with the news. So I don't know how accurate the news is that we actually get. Throw in there now these days social media. It's anybody's guess what is truth, right? What is truth? So a lot of uncertainty in the markets. That's actually part of the issue. Geopolitical conflict, and of course, energy price shocks, persistent inflation, interest rates, traders bracing for possible higher rates. Now, the Magnificent Seven is losing momentum here, possibly. Actually, they are, with traders that are shifting away from the market leaders, and even AI. AI is a big thing these days, or at least it was just before the war broke out. Elevated risk aversion, the fear sentiment is kicking in. Investors are now in the extreme fear zone, and traders are faced with challenges in managing that fear and greed. And they also have a particular urge for this fear of missing out, FOMO. They want to be in a trade. And here's the thing, and I noticed this with our trades as well, believe it or not. And us, John and I, being cognizant of this, you would think that we would not be affected by this, but I found myself affected by this. That if you are in a losing trade, you're getting you take a loss for a trade, then you want to get back into the trade afterwards, get back into another trade to make up for the loss. Because the market vacillates. It goes up, it goes down. And let's say the market's going down and I'm sitting in calls, I dump the calls, I want to jump back into puts, and then the market will reverse, go back up, and I'm saying, oh my gosh, it's just whipsaws you right out, and it's a real challenge. You get this whipsaw effect. It can be very difficult to trade that, so you have to really pay attention. You have to go, trade small, trade often. Don't be very careful. I know John tends to go a little more further out with what he sees, and he'll go for longer gains, and he does very well with that. I found myself going for the shorter games, but it has been a little tight for me these days as far as getting those gains. It has not been an easy run. So those are the things to watch out for during these times. It's not like before. It's almost like you can almost set up and just forget about it. Go out, go about your day, do something, fun. Come back later, the money's in your account. You really have to pay attention now. A lot of head fakes. The market will shoot up only to hit a certain bang key resistance area, and then all of a sudden the bulls rush in immediately, knock it off off the edge, and down it goes. And then it continues to go down, down. Like I said, the other day we lost 15 points. That's a lot. That's huge. And the next day we lost even more. Our trades this week reflect the challenges. Monday we had 4 wins, 2 losses. Tuesday, 6 wins, 1 loss, 3 wins, 1 loss on Wednesday. Same on Thursday and Friday, 5 wins. So it's not been a spectacular week, and I'm going to report honestly what we've done here, and it's been a struggle. And I don't recall a long time that we've had what's this 5 losses in a week. It's not 1 losses, it's 1 loss. Let me get this straight here. Okay, there we go. There you go. Make this right. There we go. It's been a while since we've had so many losses, but it is what it is. And our goal here, our goal is, let me just pull this up here. So this is what we're doing here. Let me just go back. This is a 2026 goal. All right. So we're not aiming for 50 or 100,000 or something like that. What we're doing is if you were to take $5,000 and place it into those trades that we narrate in our trading room every day, since early January, you would still, believe it or not, even with those massive losses, look at those losses, unbelievable. You'd still be up over $4,400. All right, not huge, not huge, but at least we're on the plus side, right? And here's how this works, this 2026 goal. We track all the trades in the trading room. We are recording them only as if we're only buying 5 contracts per trade. And all trading in the trading room is included in this that we narrate. Now, that said, let's say I'm narrating something and John places a trade. He hasn't had a chance to narrate it and discuss it. That's not going to be counted. Okay, that's not going to be counted because he hadn't had a chance to expose it to you so you can jump in and trade along with him. Okay, and that's how that works. So these are the trades that we are referring to in that spreadsheet. Anyway, we're going to plod along, do our best, and I'm pretty confident we're going to come back up because the longer that we trade this crazy market, the better we get used to it, and you'll see that an improvement has been had the last day or two. Anyway, it's kind of where it sits. We're going to get through it, folks. And what we do is we take all the knowledge that we glean from our trades, including especially our losses, I should say, and we turn them into positive things to talk about. So one of my big mottos is never let a loss go. Um, go. I forgot what the motto is. Never let a loss. Never waste a loss. Right? If you have a losing trade, take a lesson from it. Right? Always take a lesson from your losses. And that's really important. I mean, you don't really learn a lot from your successes. You had a success, great, celebrate it. But when you have a loss, learn from it. And I've had some recent losses, and I've learned a lot from those losses. Let me tell you, a lot, because some of those losses were pretty big. Okay, and I learned that I get a little complacent. Oh, the markets don't always go up. Oh yeah, maybe just wait a little bit longer. Don't jump the gun. Don't feel the need to be in the trade. A lot of different lessons, and you really learn from the losses, right? When it hits your pocketbook, right, your wallet, that's when you really learn. Anyway, folks, but what we do is we take these losses and we take the lessons and we pass on the lessons to you. And that gives us a real edge on everybody else because we teach you what we learn the hard way. And we have these solid goal, learn and earn actionable plans. And these are the programs. So I'm going to bring these up here and talk about our programs because I know I talk about them every week, but I have to because a lot of people sit on the fence and they wonder when they should get in. It's funny how people actually, they'll sit on the fence for the longest time, then they jump in. And usually I get an email saying, oh, I should have done this a long time ago. Where were you a year ago, 2 years ago, 3 years ago? I said, oh, we're here. We were here. Where were you? Were you here 10 years ago, 12 years ago, 14 years ago? How about 16 years ago? You know, we were here. Anyway, don't worry if you don't get a chance to get the QR code. We're going to put them all up at the end of the session anyway, so we'll leave them up there for a good 2, 3 minutes. You'll be able to snag them at that point too. So if you want to subscribe to any of these services, you will have this opportunity. So every single person, every single trader should be part of the inner circle for the simple reason that we do a lot of the heavy lifting for you. Okay. Every morning, John and or I, usually John, he scours the world. He scours all the news feeds, Twitter feeds, or should I say X now. He scours all the different sources, and he'll talk about, he'll look at all the information that is going to affect the stock market today. He doesn't know where it's going to be a month from now or a week from now, but today. He has a very good pulse on where the market is going to go today. All right. And he releases that to subscribers in our morning market analysis. All right. So you're going to get in your inbox just 9 o'clock, a little bit after 9 o'clock, this brief synopsis as to what he sees shaping up for the market that day, which is really cool. Now you could use this as your main guide, or you can compare it to what you see, or maybe you'll see something on here that you didn't notice before. Oh, wait a second. I didn't know there's a relationship between gold and the stock market or silver and whatever. You'll also get a follow-up report later in the day as to what we actually did. Okay. And of course, you'll be invited to our Wednesday night interactive meetups, where I like to say John Holstad, and he doesn't let any questions go unanswered. I know they used to do these for about an hour, but he's stretched this quite a bit after that. So if you have any questions at all about the stock market, about our trading, chart setups, some of the indicators, whatever, bring them to the class on Wednesday night. Okay. And he'll talk about them. So very informative, concise, everything you need in one report. And here's the best part about it. We are talking about, $2.99 a year, which is absolutely nothing. $5.75 a week, cheaper than a newspaper subscription. I think it's cheaper than a coffee and a donut. I think you might get a Starbucks coffee once a week for the cost of the inner circle. Everybody should be in on the inner circle, even if you use it once a week. So next up, people ask us, well, Hugh, I can't really trade in the morning with you guys in the trading room, but do you have an alert service? And the answer is absolutely yes, we do. In fact, two of them. And here's the difference, right? The DayTradeSPY signal. This sends out an alert to your cell phone 3 to 5 times a week in the morning, sometime in the morning. It won't be before 9 o'clock. It happens during market hours. During market hours, all right? The idea here is to buy it as soon as you get the signal. Stop what you're doing. Pull up your trading platform on your cell phone. Make the purchase. It's a particular option we tell you. Make the purchase, put up for sale right away for 5% gain. Immediately put it up for sale for 5% gain. If it is not sold by 4 o'clock, sell it at market close. $14.95 a year, $3.99 a quarter. Let me just see what that would be. $3.99 a quarter. Divide that by, let's see, $3.99 divided by 3. So you're down about $133 a month. And that works out to about $30 a week. Or you're talking about roughly $6 a day. $6 a day for a particular signal that is working extremely well. I don't know if the high 80s, 90%, 88% success rate, something like that anyway. We also have the pick of the day. Now, by the way, the signal is an algorithm-based system, okay? Algorithm-based system. Now, the pick of the day is a little bit different. This is where John and I actually get together in the morning before the market opens, and we determine a particular pick. All right, we hammer out the details. We take a look at all the technicals, fundamentals. Is it going to go up or is it going to go down? Where's the propensity, up or down? And then we pick a particular option that we're looking to trade. Now, the last little while, there were actually a couple of days in there, maybe even 3 days or something, where we had a contingent put on the trade. So we would say, well, here's the trade, but if the implied volatility is this by such and such a time. So that's kind of nice because what we're finding was that the volatility was so elevated at 9 o'clock that we couldn't really give you a good trade. And we didn't want you jumping in on something very expensive only to be left holding the bag once they suck the volatility out of it. Okay. So this here trade is designed to be purchased at the market open at 9:30. So let's say it's a put trade, right? And the market opens at 9 o'clock, right? And you see the 1 minute candle red pushing to the downside, down, down, down. Just get into it right then and there. Just buy it then. And then, right? And then immediately put it up for sale for say 6% profit target. Now, I had somebody ask me the other day, well, how do I calculate that? Well, let's say you bought it for $3. All right, $3. Take the $3 and multiply it by 1.06, and you'll have $3.18. Put it up for sale for 318. All right. Good till canceled order and go enjoy the rest of the day. Come back later. You'll usually it gets filled in a few minutes. Okay. Usually it gets filled in a few minutes. If not sold by 4 o'clock, sell it at market close. 3.99 a quarter, 14.95 a year. Just like with the signal, works out to about $6 a day. Now, our world famous trading room, hosted by John and myself, interactive. All right. This is where you're going to learn and earn. Fully narrated. This is where our strategies come alive. This is where our strategies come alive. We're looking at breakout trades. We're looking at OMG, short for out of the morning gate. We're looking at longer term. When I say longer term, maybe an hour down the road or something. John will pull up his Fibonacci and say, well, I can see the extension coming up to here, here, whatever. So he may get into a trade there and just hold on, go for the ride. These are also recorded for later review, just like the Inner Circle Wednesday night session. They're all recorded for later review, right? And the trading room is an amazing value for only $24.95 a year. If you don't want to go a year, you want to try it first, $6.99 a quarter. Let me see what that would be. $6.99 a quarter, divide that by 3, $233 a month. And that works out to about $53, $54 a week, or roughly $10, $11 a day. I believe if you buy a Subway sandwich, I don't even know if you can get it for $10, a Subway sandwich. So we're saying here is just buy lunch for one of us. Okay. What a deal, folks. This is actually the best value. And by the way, and I had some people say to me before, say, well, I don't know how to, I don't know much about that, the strategy, so I don't want to be in the trading room. So I'll ask them, well, do you know what calls and puts are? Oh, yeah, I know what calls and puts are. Well, then you should be in the trading room because that's what we do. We teach you there. That's what we teach you. You know, that's like saying, well, I'm not going to go to my history class because I don't know anything about history. Well, that's why you go. Okay. So people ask me, well, it's so expensive and this. And I ask them, okay, I know people who trade for a living. This is their career. This is their career, right? And if you were to say do another career, let's say you went to college. Oh, how much is that going to cost you? Think about that for a second. How much is a college degree going to cost you? 4 or 5 years or whatever it is. And when you get that, does that guarantee you a job? Ha, not a chance. You might get an interview, and you might get a second, and you might, long shot, right? The Hail Mary pass. You might actually get hired. And then you start at the bottom. They're going to tell you what they want in their coffee. Okay. What time they want their coffee and when you can take a break, when you can go home. Anyway, folks, this is where you need to be. All right, let's get into some programs. And this is the cherry on top. If it's not for you, within 30 days, give them a call. You get your money back. Are you kidding me? I fight that tooth and nail, but they say, no, no, no. We got to give the people their money back if they don't want it. Folks, all right, here we go. Let me get this camera here. I'll just bring it down a notch. Here we go. How's this? A little bit better? All right, let's take a look at some questions up on the board. Questions, questions, questions. Okay, Phil's asking, you gonna go move to Florida? No, no, I have too many friends, family, relatives, whatever here. I kind of like it in the North Country too. I like the seasons. Listen, Phil, Florida's beautiful. Don't get me wrong, right? Florida, and I know you're in Las Vegas or something, right? Beautiful, warm all the time. But we like the seasons too. Yeah, I like snow a couple weeks a year, maybe even a month. 4 months is a little too much, but we love the spring, we love the fall, and of course the summer. So I think we're sticking around here for a little bit, at least on the short term. Might go a little. I don't know. Anyway, that's not going to do the trade here. Okay. Here's a question. Is it possible to send an updated email for the pick of the day to let members know if you went with calls or puts, especially like last week when I posted the pick was up in the air depending on IV levels without having to join the trading room. Okay, so we don't actually so Mark, so we don't actually talk about the pick in the trading room because it is actually a different subscription. We talk about it after the fact. Okay, because it's not fair to the people who pay for the pick and if we tell everybody in the trading room include the pick. But the question is, can we send another email? So the short answer is no, unfortunately, because we're in the trading room, right? We're trading in the trading room. So we don't actually have the opportunity to send out a second email. However, what you got to do is you have to watch the IV. So when we say, and we do this pretty quick, like it's going to come up quick. So we'll say something like in the pick, here's the pick, but only if the IV implied volatility falls under, say, 23% or whatever it is by 9:35. So just keep an eye on the IV. Now, if you're using Schwab Think or Swim, it's one of the columns in Schwab. You can customize it, bring up your implied volatility, and just keep an eye on that. So if the volatility drops, and usually what happens is when we put that up there, the IV implied volatility is very high. Could be 30, 40, 50% or some ridiculous thing. Well, don't trade then. Don't trade with volatility through the roof because those options could cost you $10, and then when they suck the volatility out of it, the option comes back down to $5. Well, what happened to the $5 did I lose that? The answer is yes. Yes. Yeah, you have to make up for that $5 volatility squeeze, right? If you were to buy it right away. So even though we might say we are thinking of calls here, but only if these conditions present themselves in a short period of time. And usually that'll happen. If that is to happen, it's going to happen fairly quickly. And by say 9:35, if that happens and the IV had dropped, okay, now look to get into the trade. Okay, so and but it's not that hard. You're gonna, you'll pick it up pretty quick. You'll pick it up pretty quick. All right, Keisha, welcome, Keisha. I hope I pronounced that right. It says, I'm new, buying your service tomorrow. I'm not sure if I should get the option picker or the trading room. Well, it depends. I mean, they're two completely different programs. Okay, it depends on what your, where you're leaning to. My opinion, if you have the time and you are willing to learn what we do, so join the trading room because that's where we teach you how to fish. And I don't like to fish. I'm not a fisher. I fished in my, probably as a teenager. The last time I went out fishing, I don't even know if then. But we teach you, right? We teach you put the bait on the hook, and this is where you let's look for that sonar or whatever. Let's see where the fish are. Go where the fish are biting. We teach you that in the trading room. Whereas in these other pick alert programs, the pick or the day trade spy signal, we simply advise you of a particular option with which to buy right away. And you buy it and then you put it for sale. Now, do they work 100% of the time? The answer is no. Nothing does. Nothing will work out. Like no service. Nobody know. If anybody ever tells you they are right 100% of the time, they are lying to you. Okay? Because nothing is ever going to work 100% of the time. But we're pushing, I don't know what it is now. I haven't seen in a while, 90% or something. But anyway, and that's pretty good. That's actually very good. In fact, I got to tell you, the other day I was, I don't know, we're driving, but we're listening to, I think it was Fox News on the radio. And some guys out there saying how they're bragging about how they're 80% right. And 80%. I looked at my wife, I said, I said, if if we are 80% right, we're looking at bankruptcy. You think that's good? Oh my gosh. No, 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 no. You got to be right a lot more than that. Anyway, so depends on what you want. Now, what I would recommend, if you can, Keisha, get into the trading room because that's what we teach you. Now, I will say this. The key with the trading room is things do happen fast. And trust me, you will pick it up. It's kind of like, it's kind of like going to a horse race, you know, or a car race or something, and the announcer's going, coming up around the bend is, it goes fast, but not that fast, okay? And you will pick it up. And if you do have any questions, you have the questions box there. And there are lulls in the action. Sometimes the market goes very fast, so we have to announce our trades quickly. But for the most part, it's slow enough that you'll be able to understand what we're doing. The issue is that if John has a trade and I have a trade, you have to, in your mind, differentiate between our trades. But we do talk about them and we do respect each other. So if John's narrating something, I will step back and let him finish, and he does the same with me. So you'll pick it up pretty quickly. And the trick there is to stay with the trading room as long as, like for a long time. Because the longer you're in the trading room, the better you're going to be at it, and you're going to get more out of it. Okay. And we got some people in the trading room that have been there for years, doing very well. So, okay. Question about the Wednesday night Zoom that is open to Inner Circle members. So you must join the Inner Circle to be invited to the Wednesday night Zoom meeting. Okay. Okay, and here's a comment from John H. Powell said he's not going to leave until Trump's accusations are disproven. Okay, I don't. Yeah, okay, thanks for that. Um, I heard that he's not going to leave until the new guy is sworn in. So okay. Okay. Question: what indicators do you use in deciding whether to take a loss or a hold position? We get into that in the trading room itself. So again, this is not designed to be a training session like that. Okay, so but get in the trading room, Marquez, in that one. Ask that question. And we'll talk about that. Bring it up because other people in the trading room would want to hold that as well. And sounds good. And let me just go some more questions here real quick. Uh, Raj, year to date means yes, from January to March 20, the gain of 4K. That is correct. We were actually up around seven, but we took some bad losses there. We took some losses, so we're gonna make up for that. The idea is to make up for that. So, okay, sounds good. All right, question: how long gonna trade before getting out? Pre-warn most trades seem to take less than 7 minutes. Friday, I waited till I missed my exit price twice, missed $100 loss twice before I finally got out. Finally settled for only $100 loss and was glad for it. Okay, Rod. Um, yeah, thanks for that information. Um, so what we do is we analyze the trades and we see what the market's doing, and because the markets do change very quickly, sometimes you might not want to get out of a trade like with a stop loss because in this case, especially these days, a lot of times that stop loss will take you out, but then if you wait just a few more minutes, the market reverses would have given you your profit. So we have to take a look at a broader picture, overall view of things the way they go, and determine whether you should stay in this, bail out now, make sure you have more time. The longer you're in it, the longer time you have, the less data loss you have. There's all kinds of considerations that we look at, and we do that in the trading room here. How are the results from the trading room during the Iran war? Well, I just showed you that. Okay. So those results that I showed you earlier. I think Friday we had 5 wins, no losses, but we had 5 losses through the whole week, which was actually really high. Um, that's hard, I don't think we've ever had that where we had 5 losses in a week, at least not that I remember. So this particular week was very high. Now, that said, I was on vacation. I was not 100% there firing on all 4 cylinders or 6 cylinders. What would be 8 cylinders? Remember we used to have V8 cars? V8 cylinders. Let's go with 8 cylinders. Um, buddy of mine had a Jaguar. He had 12 cylinders in that car. Oh, God. Imagine having a car, 12 cylinders. Oh. Anyway, but our results are we're holding our own. But with every day passing, we learn more and more, and we're getting better at it. So I expect by very soon, I expect to make money tomorrow. Okay, let's put it that way. So okay, let's see to the question: am I referring to the VIX when I suggest not to get into the trade because of the volatility? No, it's not. It's not necessarily the VIX. I'm not looking at the VIX. Okay, so the VIX, for those who don't know, the VIX is like it's a volatility indicator. Okay. And the higher the VIX, the market tends to go down. Okay, the higher the volatility. No, I look at implied volatility on the on Schwab Thinkorswim. It is actually a number, a percentage that I look at on the Schwab Thinkorswim. Now, I get it. Some platforms might look at IV in a different way. They might say, they might have a different calculation or something, but I'm referring to the Schwab Thinkorswim IV, implied volatility. That is the number I'm looking at. So when I say that, so I don't follow the VIX. I used to look at the VIX, but I found that the VIX gives you no real usable information. It goes concurrent to the market. All right, goes very much concurrent. VIX is up, the stock is down. Stock is down, VIX is up. VIX is down, stock is up. There's no leading indicator, no leading information that I get from using the VIX. So for that reason, I don't get it. All right, so I see the time is now 9:03. Again, I don't want to hold you forever. What I want you to do now, folks, is pick a number from 1 to 100, 1 to 100, and punch it up in the questions box. And I'm going to run the DayTradeSPY random number generator. And we are going to pick a number, and the winner gets the ebook Tips, Tricks, and Traps sent to them. So I'm going to give you about 30 seconds to punch up the number. I'm going to just bring this up over here right now. Question, okay, pick a number between 1 and 100 and stick it in the questions box. And what happened to my random number generator? Okay, I lost it here. Hang on, I got two screens, and I just have to bring it back up. There it is right there. That is not the number, folks. It is not 81. All right. That's from last week or something. So I'm just going to pull this down now, and I'm going to give you another 20 seconds or so to get your numbers in. And okay, and the winner gets the ebook Tips, Tricks, and Traps. Now, if you already want tips, tricks, or traps, let me know. Then I'll send you Triumphs and Tragedies, right? Okay, let's take a look here. All right, 5, 4, 3, 2, 1. Do I have all of the numbers here? Okay, all right. Let's pull up the random number generator, ladies and gentlemen. This is the official DayTradeSPY random number generator. That is not the number. So what I'm going to do is count down, and I'm going to hit the button, and then the number closest to it is going to win. Okay, so 5, 4, 3, 2, 1. The number is 78. 78. Let's see. And by the way, if there's a tie, you both, or however, get the number. Okay, let's see. Let's get some. Come on, hang on. Stay down. Came home where we got the big bad fat cat where cat's sitting again. Can you believe it? She's always in the way. All right, John H. 74, David G. 74. It's the number 78. Oh, Reggie G. All right. 79 for Reggie and Bill K. 79 as well. Wow. Okay. So far we have 2 tied for. Okay, congratulations to Reggie and Bill K. I will send you the ebook, Triumphs and Tragedies, right after this session. Okay, cool. That was fun. I enjoyed that. All right, folks. I think we're going to wrap it up here with this. And again, I'm going to bring up those QR codes. Please, if you haven't done so already, do subscribe to our services. I think you will find them quite quite good. Anyway, been a pleasure, folks. The recording is going to be sent out soon. Have a good night, folks.
Take some and there ain't no stopping now. You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have